Thanks for joining us today. I'm Christian Faes, CEO of Faes Co. I'm here with Jamie McGee, who runs our investor relations and the investor side of our business. So we run the Faes Co. Income Fund, which is a real estate-backed fixed return fund. So the mission of our fund is to provide investors with a consistent, stable, asset-backed return. And we're lucky to be joined here today by Nate from Self-Directed IRA. And we have a number of investors that have invested in self-directed IRAs. And I think it's a topic that comes up quite regularly when we're talking to investors. Is obviously a very tax efficient way to be investing in a fund like ours. Particularly, we have investors based in California, which is where we are, and we all know we get taxed very well on our income. So as a fund that produces income, people are often looking for ways to make an investment in a more sort of tax efficient way, let's say. So self-directed IRAs come up. So today we're going to talk through that as an investment wrapper and what the process is, and to totally demystify it. So thank you for joining us today, Nate, and we look forward to tapping into your knowledge. Maybe we could start, if you could tell us a little bit about yourself and your group as well.
Yeah, so my name's Nate Hare. I'm the vice president at Directed IRA. We're a company that allows people to use their retirement accounts to invest in private assets versus publicly traded assets. We're like a Fidelity, but we don't sell investments, but we give people the opportunity to use a retirement plan to invest in things like income funds, real estate funds, debt funds, things that they probably didn't even realize that they could invest in. But I got into this industry completely by chance. I didn't even know this product existed up until 2012. I was in real estate from 2004. I always knew I wanted to be a real estate investor. I was in the mortgage business. I liked the numbers on real estate. I did a lot of lending, had my own rental properties. I thought I knew enough about real estate to call myself a real estate investor. And then in 2012, I get a call from a company out of Houston, Texas, that says, "Hey, we like your experience in real estate. Can you come teach more people how to invest in real estate through their retirement accounts?" And I said, "Well, hold on one second. Pause. Did you say invest in real estate inside your retirement plan?" Now, for me, I was conditioned to think of my retirement plan like most people are. You just put money on to the side, and somebody else invests it for you. And those investments are investments you may not even know, but it's usually just stocks, bonds, and mutual funds. But I was investing heavily in real estate, and that's where I was making most of my money. So this was an aha moment for me when I finally learned by chance that yes, a retirement plan is not only used to invest in stocks and bonds. A retirement plan can invest in real estate, or what I like to call tangible, appreciating, cash flowing investments can be owned inside of a retirement plan. Yet most people have no idea that it's possible. So I get a lot of passion. So I've gone head on into this industry since 2012. And for the last 14 years now, I've been just teaching investors about how these plans work.
Right. And I imagine with the sort of the rise generally of alternative investments and their sort of increasing popularity, I mean, a thing that we often talk with our investors about is kind of investing in public equities is kind of a traditional safe place to put your money, or not necessarily safe, but kind of like a traditional place to put a large allocation of your investment portfolio to. But increasingly people see the volatility of the stock market and the increasing concentration of kind of like a few companies dominating the S&P and so on. So people are looking at alternatives, and that encompasses a wide range of investment opportunities. But I guess from a tax wrapper perspective, a self-directed IRA has sort of probably become more popular off the back of the interest in alternatives as well.
Yes, alternatives have been on the rise, and I would probably attribute that a lot just to the internet and just the age of information. The fact that a retirement plan can own real estate or invest in a multifamily syndication or land, or all that's been available since the mid 70s. But the only people doing it back then were the rich and the wealthy, or people that they knew people in those industries. They knew people that were buying, apartment buildings or commercial property. So they were always using their retirement plans to invest in it because they knew the people operating the investment.
Right.
Most of us we don't know those people, right? But now we
Right.
do, or now we at least have the opportunity to go online and search alternative investments from the comfort of our own home. So I think a large part of it is just information is readily accessible to everybody. But I think a lot of what you said is true too, is that there's been a lot of, I guess, uncertainty with just the stock market in general. Hey, it's had a great run lately, but ever since 2007, 2008, people were just like, I don't know what to invest in, but everyone's 401ks turned into 201ks, almost overnight. So I think people started looking at that point. That's where we started to see kind of an uptick of this interest in self-directed IRAs. And people
Yeah.
just wondering, there's got to be something else I can own in
Yeah.
my retirement plan. And maybe not as just like an alternative to the stock market, but in association with the stock market. Most of my clients who have retirement plans, they don't just have one. They have a retirement plan with Fidelity that holds their stocks, bonds, and mutual funds,
Right. Yeah.
but they have a self-directed retirement plan with us too, because you can have as many retirement plans as you want, but they have a plan with us that allows them to invest in off-market properties, debt funds, income funds. And that's really, if you think about it, that's real true diversification. If you have the
It's
ability to,
diversification.
that's
Yeah,
real
exactly.
diversification, right?
Yeah.
So,
And look, yeah, we're the same. I mean, we're not investment advisors, so we don't sit down with the clients and sort of put together a portfolio for them or anything. We've just got one investment product. But when we are talking to investors, we just try to put it forward, no one investment is suitable for all of your investment capital. If you're putting together a portfolio, a particular retirement portfolio. So it is about diversification. It's looking at a fund like ours. You get a good return, and we think it's a relatively low risk adjusted return, or it's a good return for the risk involved with the investment. And just think about putting some of your investment portfolio into a fund like ours. And so I guess it's thinking about how they do that in the most tax efficient way. Jamie, I mean, you were thinking about, you've obviously talked about investors probably as much as I do, if not more. I mean, what's the sort of themes that come up when people are thinking about self-directed IRA?
Well, actually, I was gonna ping it back to Nate and just kind of talk about like who is typically a good fit for a self-directed IRA, and just who are the type of people that are you see coming in using your platform. Be curious to hear your thoughts on that.
Mm.
yeah. So if you look at all the retirement plans combined first, there's $49 trillion sitting in US retirement plans. It's the largest source of American wealth.
Wow.
So to anybody out there, realize most people have more money in their retirement plan than their bank account. And the thing with a retirement plan for most of us, if
Mm.
we're not retirement age, it has to be invested in something. I mean, that's the benefit to have a retirement plan is you can buy stocks or real estate, but you don't pay taxes on the gains, but it has to be invested. So at the end of the day, who is the avatar that chooses, I want to invest in alternative investments? Okay, because we're seeing a rise in it. I would say our typical avatar is somebody that's a little bit more entrepreneurial with their money in general. They say, you know what? I want to make decisions on how my retirement grows. I want to just be in more
Right.
control of my
Yeah.
retirement. Because the thing that we do that's different than Fidelity or Charles Schwab is they sell investments. They hold retirement assets, but they also sell financial products, right? So you go to
Right.
them and they're going to sell you investments and they get their commissions and broker fees and yada yada. When you have an IRA with us, we don't sell investments. We just say, you tell us what the investment is. So that's why we call it a self-directed IRA, but that's not a legal term. That's just a marketing term. It just means
Right.
the client has to find the investment and tell us what the investment is, and
And
we buy it as the custodian. So it is a little
right.
bit more of an entrepreneurial type of avatar that you're dealing with. Or it's somebody that just wants to leverage their relationships, right? They want to leverage an opportunity that is comes by them that they say, you know what, that sounds like a really interesting investment. But they have that sort of network or they search that type of network out. Reality is most people are just going to sit back and take the easy route, right? Doesn't necessarily mean it's going to be the most profitable, but a lot of people are just, I just want somebody else to do it. I don't want to worry about it. But there's
Uh,
still a lot of us
yeah.
that say, no, I'm going to retire on my terms. I'm going to make the decisions and I'm going to dictate how this goes. And if
Yeah.
you think of that avatar, it's usually the rich and the wealthy that are that entrepreneurial type of investor. So I would say at the end of the day, since the client has to pick the investment, they just have a little bit more of an entrepreneurial spirit.
Yeah.
Yeah,
And-
Christian, and I just real quick, I think of our investors that have gone this route, it's exactly that. They had a Fidelity account or a Schwab account or something like that, and they felt, like they wanted more flexibility, right? And so they did go this route, and it gives them so much more exposure and flexibility. In one instance, it was kind of like an unused 401k or something like that.
Mhm.
Again, I think it has to do with a little bit of flexibility. But in terms of age group, we've had people that are a little bit younger and people that have been retired for a while. So
Yeah, that surprised me actually, because I assume, or I guess wrongly kind of think of this type of investment product as being something for retiree type age people, which clearly, but it's not, it doesn't matter on age, right? It can be
No,
any stage of life and kind of,
yeah.
yeah.
Any stage in life can really, I would say the most common way somebody self-directs is it's not that they just started an IRA, because we've got several different accounts. You can self-direct a traditional IRA, you can self-direct a Roth IRA here. We have 401ks, other employer plans like a SEP. But
Mm,
most people don't grow their wealth by just making contributions to an IRA because the contributions are relatively small. Most people start an IRA because they had a 401k at a company that they worked at. They
right,
left that company and was forced to roll it into an IRA. But I would say just because you left a company and you had a 401k nowadays doesn't mean you're in your 60s.
yeah,
right.
You could be in your
Yeah,
30s. You could work three different jobs and be 30 and have three different 401ks at this point because people are, nomadic in that, and people, there's always new opportunities and there's new technologies, and a lot of my friends, I mean, myself, I've worked at probably 7 or 8 different companies, and I'm fairly young. So anytime you're at a company and that company has a 401k or some sort of employer sponsor plan, when you leave that company, that rolls into an IRA. You can roll it to an IRA at Fidelity and buy stocks, or you can roll it to an IRA at Directed IRA, invest in alternative assets, or do both. So I would say when it comes down to age demographic, it's kind of interesting. It's a lot younger than you think because all it takes is somebody to have a job at some point and somebody to leave that job.
yeah, right. And then into obviously we talk to investors about investing in our fund, the Faes and Co income fund. But if someone sets up a self-directed IRA, what investments can they put in there? What are sort of eligible investments for
So
that vehicle?
here's the interesting thing. I didn't even know that there were laws on this, but there are only two investment restrictions in the IRS tax code. So the IRS does not really care what we hold inside of a retirement plan, as long as you have a custodian that holds the assets for you. But the only two investments you're not allowed to hold inside of a retirement plan are life insurance contracts and collectibles. That's it.
Oh well, collectibles like watches or artwork or something
Classic
like
cars, antique rugs, your baseball card collection, certain gems and metals. The reason they
that.
don't
Okay.
like those investments is they're hard to value, right? It's
Right.
the value is what someone will pay for it. So IRS doesn't like hard to value assets inside of a retirement plan.
Right.
Life insurance contracts, they just don't want your IRA to get huge payouts when somebody else dies, right?
Right. Right.
But outside of that, it's fair game. So as a
Hmm.
general rule of thumb, if you can draw up a purchase contract to buy something, or you can hold title to an asset, the owner of that asset or the buyer of that investment can be your retirement plan.
Right.
And that's the interesting thing. So we're still buying assets as the retirement plan, but you're finding it and we're buying it in the name of the plan. But the investment options are almost limitless.
Right. And forgive my ignorance a little bit, but just sort of maybe others that are watching this would have the same sort of questions. And the reason you would want to set up a self-directed IRA and put investments in this vehicle is it rolls up. Income is kind of, am I correct to say it's tax-free whilst the investment remains in the vehicle?
Yeah, I would say the more accurate term is tax exempt because
Tax
if you
exempt.
think
Okay.
about, we'll take a traditional IRA Roth, that's what most people are familiar with. if I invest in, let's just say a piece of real estate, I'll just break it down real simply. Let's say I invest in a rental property. I
Right.
want to buy a rental property with my self-directed traditional IRA. When the renters pay rent to my self-directed traditional IRA, my traditional IRA doesn't file a tax return. All the income is tax exempt. So every
Right.
rent check that comes into my traditional IRA is not taxable to the IRA. If my IRA sells the property or if I find a buyer for that property, all the gain on that investment comes back to my traditional IRA tax exempt.
Right.
Same exact thing happens in a Roth. The only difference is with traditional Roths, you're taxed on distributions to yourself from a traditional, and you're not taxed on distributions from a Roth. So
Right.
when it comes to the IRA, they're the same. Traditional and Roth IRA are both tax exempt trusts by nature. So if you think
Yeah.
about that, if you can have income producing assets or real estate backed assets that are generating income, the income to your retirement plans are not taxed. So your retirement plan grows much, much faster than the income you receive because you have to
Yeah.
pay taxes on every dollar you
Yeah.
make
So the
every year.
compounding growth is kind of like, well, not
Yes.
exponential, but significantly more rolling up in this vehicle. And then what are the rules around taking money out? And so you take money out, then you're taxed in full, are you? Is that how it works?
You're only taxed when you take money out of a traditional IRA. So let's just assume you're taking money out at retirement age, 59 and a half,
Right. Yeah.
which seems not even old nowadays, but
Yeah, that's quite young.
59 and a half. So I say retirement age, I'm like, everybody I know that's 59 is still working. But anyways,
Yeah.
so if when you have a traditional Roth IRA and you're 59 and a half, when you take money out, the only difference is I pay taxes on my traditional IRA distributions, but I don't pay taxes on my Roth IRA distributions. But this is important. People don't understand the importance of identifying what type of account do you want to invest in. I invest solely in a Roth IRA because for me, I have the ability to invest in real estate backed assets that compound. So if you do run the numbers, if I could compound my interest in a tax-free account, I don't want to pay tax on the growth. I want to pay tax on the seed before it grows. So for me, I like to invest in a self-directed Roth IRA. And here's the beautiful part about a self-directed Roth, if anybody's interested. If you can invest a self-directed Roth into income producing assets, and let's say you have the ability to stack multiple assets inside of a Roth by the time you're 59 and a half. Well, all of those assets, as they generate income and you're 59 and a half, you have now what's called qualified distributions. You get tax-free distributions from your Roth for the rest of your life. You don't
Amazing.
you
Right.
never have to pay taxes again. You're off the grid. The IRS can't touch you. So I have clients literally today that are living tax-free just off their self-directed Roth IRA investments, and their Roth grows every single year. So
Wow.
and to them, they say, Nate, I'm never doing an investment in my name again because I pay taxes on every dollar I invest. I've got this large Roth IRA. I just buy everything in my Roth IRA and let my Roth IRA pay me tax free now that I'm 59 and a half. So that, I mean, that's powerful stuff. I mean, that's
Yeah.
really how you build tax-free legacy for yourself and pass it on to your kids. Because when you die, your IRA turns it into an inherited Roth IRA, and they get
Yeah.
to live tax-free for another 10 years. So it's just powerful stuff when you think about the tax-free vehicle that a Roth IRA specifically is, and the ability to throw alternative investments in it that cash flow. I mean, that to me,
Amazing.
that's a better way to retire.
Yeah. And then Jamie and I were talking about this earlier, but it's like, what's the process for someone, if we've got an investor and we're sort of steer them your way, or that sort of want to set up one of these accounts, how long does it take, what sort of paperwork's involved, and fees and costs and all that kind of stuff?
Oh, you're asking me? Sorry,
Oh
I thought
yeah,
you were
sorry,
asking
yeah, I
Nate. Sorry, I thought you said Jamie for some
know.
reason.
No, Jamie and I were sort of
We
talking
were
about like
talking
what are
about
the
it. Yeah, yeah.
investors
No,
would want to
okay.
know about.
And also, I know we touched on this too. First answer that, but
Mm.
I really want to like paint a picture for people, and if you could also talk about, the, like the most common examples of people that you're seeing come in. Like we already touched on a little bit, but again, I want, for everyone that's listening right now, or late for later, just to kind of paint that picture.
Yep. I'll address that. I'll take Christian's question first. So the
Yeah,
process
thanks.
and the fees. It's really, if I break it down, if I oversimplify it, it's a three-step process. Open account, fund account, invest account. No different than an account at Fidelity. Open account, you go to our website, directedira.com, you fill out an application right there, takes 5 minutes, upload a copy of your ID, you've got an IRA. Now, remember, I didn't say self-directed IRA because that's just a marketing term. You can also book a call
Right.
with my team. I prefer people to talk to one of my IRA account executives. That way you can ask them all the questions, maybe tell them what you're thinking about investing in. They can kind of walk you through the process of doing that investment. But the first step, if you want to own alternatives in an IRA, you got to open a self-directed IRA. The next step, funding it. You can fund it one of three ways. You can just put a contribution right from your bank account into the self-directed IRA. You can transfer some or all of your money from another IRA at another company, or you can roll money in from an old employer plan. If you just left the job not too long ago, old 401k, 403b, TRS, TSP, any of those plans, if you've left the company, most likely you can just roll it into the IRA. So those are the three ways to fund the account. And then once you invest the account, you log into your client portal, you select the type of investment you want. If it's real estate, if it's a note, if it's an investment fund, a debt fund, and then it's going to prompt you as to what documents you need to upload so that we can sign those documents and buy the investment in the name of your IRA.
Right.
So all that, here's the cost: $50 to open the account, an annual fee to have the account at $395 a year. And each time you want us to buy an investment or sell investment, it's just a $50 processing fee to buy and sell. Now, some people think that's expensive, and I'm like, do you know how
Oh
much your
no.
401k provider
Same.
is charging you? All the commissions and broker fees. So we don't take any commissions or money from the investment itself. All the income goes to you. We just have fees for doing what we need to do, keep the lights on. But I think it's relatively inexpensive, a couple $100 a year, and you're on your way.
Mm.
So, and now Jamie's question, the most common, I would say, investment that people are gravitating toward. I think that was the nature of your question. Like, what are people, right? What are people investing in?
Well, I mean, I would be interested to hear your answer for that. But I was also just, like the scenario of the type of person that might be moving into a self-directed, or what you're seeing, recently. We kind of touched on, someone might be younger or older. I don't know, but if you can kind of like maybe paint the picture a little bit, just briefly, I'd be curious
Yeah.
to kind of hear your
Um,
thoughts on that.
yeah, I mean, truthfully, a lot of them are coming through, guys like yourselves, investment sponsors
Mm.
that are now actually learning, hey, there's a lot of opportunity in these self-directed IRAs, for us to, buy more investments or get more people the opportunity to invest in our fund. So we get a lot of referrals from, active investment sponsors that are the ones really selling the product for us because they're
Mm.
selling their investment and people like the investment. So I think that's the key, is if the person has the investment in mind and the investment sponsor is doing a good job of relaying to that person, hey, do you have an IRA as well? Have you thought about investing in that? And educating them a little bit about a self-directed IRA. That's really where we're getting most of our clients from.
Mm.
There's a
Interesting.
very small sliver of clients that come in and say, I'm an active real estate investor. I'm buying rentals. I want to set up a self-directed IRA so I can buy rentals, because that person is a full-time real estate investor. We have 30,000 clients. Only about 5,000 are active investors. So the 95% of others, they're coming from investment sponsors that are doing a variety of things: multifamily or commercial syndications, oil and gas, mineral rights, cryptocurrency. I mean, it's investment funds and people that have some sort of investment opportunity, and they're marketing to people. They're also mentioning, did you know you can use your retirement account to invest in this as well?
Yeah.
Mm.
That's interesting because I mean, I might be getting this wrong, but from my observation of the investors that come through to set up these type of account to invest in our fund, is that they're direct individuals. They haven't come through. Jamie, you probably correct. They don't seem to
Yeah.
come through because we do a lot of business through RIAs, and
Mhm.
RIAs kind of have their platforms, Schwab, which we're on, and Fidelity and LPL or whatever it is. But
Yeah.
this seems to be a different sort of customer. It's kind of like it is kind of, yeah, I don't know. I don't want to describe one customer over the other, but these kind of, they seem quite well informed, and they've kind of said, I want to come in as self-directed IRA. This is how I want to invest in this fund to reduce my tax liability. They've had advice somewhere else, but it's not the advisor sort of organizing it for them. They kind of have coming to us on their own.
No, yeah, not an
doing.
advisor. Yeah, but more of an investment sponsor, a limited partner, or general
exactly.
partner, or something like that. But I will say this, if we've had clients reach out to you, because that happens a lot too, we'll have clients that will go out and search for different investment opportunities. But I think what first got them to open an account was an opportunity that they didn't know that they can use their retirement account first.
Right.
Like that's what got them in the door. That's what got them to even know that it existed. And then once they got into that investment, and that investment, let's assume, did well, they go, well, shoot, that was kind of fun. I'm not moving my money back to Fidelity. Let's go find another one. So I've got several clients that I work with that are invested into like 14 different funds, but they started with one, and they were brought in by that one, and they got
exactly. That's exactly right. Yeah.
And in some respects, maybe those platforms don't like this so much because it's taking assets off the traditional sort of advised platforms.
Oh, advisor, they hate it. I mean, advisors that I would say have more their best interests in mind than yours. It's kind of funny. We get it all the time, especially from people that have an advisor at Fidelity or even some of the small time advisors. And I'm not picking on anybody, but the stories are pretty funny that I hear from clients that go back and they say, yeah, I talked to my advisor and he tried to talk me out of it. And I go, of course they did. Right. He goes, he said it would be too risky. You don't want to do that. You're going to pay all these taxes and penalties. I'm like, does he even understand what we're doing? You're not paying any taxes and penalties. You're not taking the money out to go buy it yourself. But it's just funny, some of the things you hear, but you know that that's an advisor that is really just trying to control their money, and they don't
not the best advisor in some respects.
Right.
Yeah.
But I'll tell you, there's a lot of good advisors out there.
Yeah, there are.
That recommend us, that say, no, we need to have you diversified. And if you want to buy, and maybe they even have, some access to some alternative deals, and they say, you need to go set up an account with Directed IRA so you can invest some of your retirement plan into these assets over here. Those are the real good advisors, the ones that also have accounts with us. We have advisors that have, we have people that work at Charles Schwab that have a self-directed IRA because they can't do it at their place. So, advisors that are in both markets, I would say, those are the real good advisors that really understand holistically.
Oh, definitely. Okay. Do we have anything else we want to sort of cover off, Jamie, on this?
I feel like it's actually been a pretty good intro for people and recap. I don't know, Nate, is there anything that you think we missed or didn't touch on that could be helpful?
No, I think we probably got enough stuff that you could chop up and have some.
I think that's it a little bit. I think a lot of people don't know that you can do this, right? That's a big percentage of people that didn't even know this was possible. And I think the other thing is, it's relatively simple, right?
Mm-hmm.
It's you might think about and think, oh, I've heard someone that did that, but I don't know how to do that. But you kind of touched on the fact that it's pretty easy to open up an account. It's not too costly, and it just gives you so much more flexibility.
Yeah, it's like riding a bike. It's tough the first time just because it's unknown territory, but once you do it, it becomes like second nature.
Makes so much sense. It's really quite compelling. So, I appreciate you taking the time to be with us today. And if you've got any questions, we'll provide your firm's contact details. And we look forward to onboarding more investors into our fund through this structure.
Awesome. Well, thanks, guys. I'll as soon as the recording downloads, I'll send it your way and have fun.
Amazing. Thanks, Nate. Cheers.
Thanks, Nate.
Bye.
Thanks.
See ya.